welcoming you to our session on tax morality. And I'm reminded of one of my favorite books by Edith Wharton. It's called The Age of Innocence. And I remember the time of innocence when it was a very easy job being a tax advisor. You were essentially a technician. You looked at the legislation, what Parliament had passed. You looked at some guidance that may have come from the tax authority. And you looked at practice and you basically weaved your way through that. And one of the topics or the titles we were thinking about calling the session rather than tax morality was, how do you go from being a tax technician to a tax spiritualist? So there has definitely been a shift on how we operate as practitioners. And I think this topic of tax morality, it attracts a lot of attention and discussion amongst tax practitioners. And I think it's a difficult and thorny and controversial issue, but nonetheless a very important one, because I think we're navigating a completely new, uncharted waters. So it's a difficult time for tax practitioners, but we are fortunate today in that we have a very august panel, and I do hope the others will be able to join when technology allows. But we have amongst us Will Day, and Will is joining us from the Australian Tax Office. And we also have Florence, Segal. And I will allow each speaker to introduce themselves and tell us a little bit about what they do, a little bit about their institution. I will just also mention that we are expecting two others. We're expecting Jim Lee from the IRS, and we're also expecting George from TaxWatch UK. With that, if you will allow me, permit me, I will ask perhaps Florence, would you like to go first? Tell us a little bit about yourself, and I'm sure you will no doubt tell us all the details that we all know, but I'm sure you will pepper it with something that our audience is unlikely to know from reading your bio. So with that, sure. May I invite you, Florence?
Of course. Thank you, Ali. Can you hear me well?
I hear you loud and clear.
Fantastic. Well, good morning and good afternoon to everyone today. My name is Florence Segal, and I've been working at the French Agency for Development since 2018 with two main roles that are quite different, I would say. The first is coordinating the tax policy of the group, meaning the policy that we have towards non-cooperative jurisdictions and the fight against tax fraud, tax evasion, and tax avoidance. And of course, this is why I'm here today. And my second role, which is quite different, but still interesting, is to coordinate the group legal watch mechanism that we have, and in particular, to monitor the evolution of the EU legislation. To give you a bit of context, and for you to understand from where I'm speaking, the French Agency for Development, IFD, is a public financial institution which implements the development and solidarity policy of the French government. This means that we directly depend on the French government. We are totally public. Our financing focus on a wide range of topics, including finance, biodiversity, peace, it can be education, urban development, health, governance, etc. And we have two main entities. The first main entity is the mother company, it's the IFD, and it's dedicated to the financing of the public sector. And the second big entity is Probarco, which is our subsidiary dedicated to the financing of the private sector. And what you must know is that the compliance team I work for is dedicated to both the IFD and Proparco operations, for both public operations and equity operations also. We have many tools to fund the projects in developing countries. We have loans, equity, but also grants, guarantees, bonds, many tools that you cannot imagine. So going back to my own experience, actually, when I joined the French Agency for Development in 2018, the new financial regulation from the EU was just being published. And actually, this is a very important text because this creates the requirements for the use of EU delegated funds, the use of EU funds by either development banks from the EU, but it can be also by other institutions. So my very first mission, which was a big challenge for all the development finance institutions, was to transpose these new regulations into our internal policies with the new notion coming from the EU of tax avoidance. Previously, the EU only talked about tax fraud and tax evasion. So it was a big challenge for us. More broadly, my mission at the French Agency for Development is to monitor our policy for the fight against tax fraud, evasion, and avoidance, and to monitor also the sort of internal tool that we have to be able to detect tax fraud, evasion, avoidance in the projects that we finance. And of course, this requires a lot of discussions, day-to-day discussions, to share best practices and our common potentially understanding of the requirements with other development financial institutions and other multilateral development banks, such as the World Bank, and discussions, of course, with the standard setters body, in particular TaxUD in the EU, and from the OECD perspective, we work a lot with the Global Forum on Tax Transparency and Exchange of Information. Previously, I got the chance to work with Pascal Saint-Amand at the OECD within the Center for Tax Policy and Administration on a very wide range of tax policy issues, including the so-called digital taxation, of course, the work on the inclusive framework on BEPS that includes the work of developing countries working on an equal footing with the OECD members, which is very interesting from a development perspective. I work on technical support projects targeted at West African countries, but my main task at the OECD was to work on the administrative signature of the MLI, the Multilateral Convention on BEPS, in the context of which I accompanied a very interesting country, which was the Republic of Mauritius. So you may understand this was very exciting. In 2016, I was working at the European Commission and in particular the DG Competition in the former task force tax planning practices, which is now, I think, a real unit. And I got the fantastic chance to work on the Amazon investigation. So I worked on the analysis of TP documentation, financial data, IP valuation, etc. And this was actually my first contact with international taxation. And as you can see, I'm still here today. From an academic perspective, to finish, I have a master's degree in economics and finance with a major in European economics and regulation law from Sciences Po Strasbourg, as well as an MSc in international political economy with a major in international taxation, of course, from the London School of Economics and Political Sciences, the LSE. In the context of my studies, I had two main fields of research, I would say. The first being the role of national interests of countries on the persistence of a flooded international tax regime. And second issue, I worked a lot on the comparative analysis of policies of the OECD on the one hand, on the EU on the other hand, to tackle harmful tax practices. So, of course, today the positions I will express are my own. And as a development bank, the French Agency for Development has a macro vision, of course, but we do not represent commercial banks. So today I will try to bring you the vision of the AFD, but more globally, the vision of the development finance institution and MDBs on the tax morality and transparency discussions. And I hope you'll find it interesting.
Thank you very much, Florence. Very kind. May I go to Will and ask you to introduce yourself and tell us a little bit about your organization?
very much, Ali. You can hear okay as my
Yes, we hear you loud and clear.
Can I just check that you can hear me okay, Ali?
Yes, we can.
Perfect. Well, good morning and good afternoon, or in my case, good evening, everybody. I hope you don't mind me calling in from my study. It is after 9:30 at night in Australia, but it's a great pleasure to be with you all. So I'm a Deputy Commissioner of Taxation at the Australian Taxation Office. I guess the hint is in the name. We're obviously a tax revenue department. We also have responsibility around the Australian compulsory superannuation regime. So we help to enforce obligations on employers. We also have a particular role, I guess, around regulation of self-managed superannuation funds. So whilst we are essentially a revenue collection agency with a focus on the superannuation system as well, Ali, you mentioned, I guess, the changing face of the tax profession. It's certainly, I think, a changing role for tax regulators as well. So in addition to those more traditional tax obligations, the ATO, the Australian Taxation Office, it does provide a national digital identity as a whole of government service for Australians interacting with the government. We also are responsible for the Australian Business Register. So in that sense, I guess we have an additional lens from a cybersecurity and a customer protection angle around providing a safe and secure digital identity, as well as ensuring both security and integrity and completeness in terms of business records, both in terms of the J5, as well as Chief of the Serious Financial Crime Task Force in Australia. As such,
Will, you just got cut off when you were talking about the J5. Perhaps you might want to just pick up on that.
Thanks, Ali, again. So look, I'm the Australian of the J5, the Chiefs of Global Tax Enforcement, and Jim Lee will be speaking as well from the US perspective. I'm also Chief of the Australian Serious Financial Crime Task Force, which means I get to lead a multi-agency task force within Australia. That includes our Federal Police, our Criminal Intelligence Commission, our Commonwealth Director of Public Prosecutions, our corporate regulator, and a range of other agencies as well. So I guess with the capability combined of the ATO, I do have quite a unique capacity to respond to serious financial, particularly against the tax and superannuation systems, and we focus issues like offshore tax evasion, illegal Phoenix activity, which is a bit of an Australian term, I think, the cyclical liquidation of companies in order to avoid payment of tax and other creditors. We have had a focus on the Australian economic response to the COVID-19 pandemic as well. So I guess my role has many hats, and I have the joy of working with a lot of both Australian and international agencies. And I guess all of that, though, does, I guess, coalesce into a role around protecting the integrity of the tax and superannuation system. And a big part of that, of course, is to make it easy for those who do comply, and we are fortunate most Australians do comply with their tax obligations. But we do need the capacity to take swift action, when you can to detect, disrupt and deal with those who do not comply with their obligations. I think Australia's made great strides in building community confidence in our ability to take firm action when it's necessary. Certainly as we work through, I guess, the economic and health impacts of the global pandemic, revenue for government is more important than ever, as is a level playing field for all businesses they seek to recover. We've certainly enjoyed our working relationships internationally. It's been a great opportunity to collaborate across five, and a great to learn, but most fundamentally to take operational action. We do know there'll always be those who have no financial morals, but we do feel that in an Australian context, we do have the scaffolding, I guess, to make sure we can take firm action to protect the revenue, which in turn provides community services. In terms of the tax spiritualist that you mentioned, Ali, or just the kind of the theme of today around morality matters, our simple truth is that from everyday Australians, it's not a victimless crime. Our job certainly ahead of them. As I said before, and I certainly do constantly remind people, we are lucky in Australia that most taxpayers and most professionals do the right thing and actively help others do the right thing. However, with technology, with information sharing, and with a globally connected world, if I was a financial criminal, I'd be very nervous. Back to you, Ali.
Fantastic. So there is a little bit of a message for any would-be wrongdoer from Will. So thank you for that, Will. May I now invite George to perhaps introduce himself? We obviously remember him fondly from last year's conference. So welcome back, George.
Thank you very much for having me. Can you hear me? Can you hear me?
Absolutely, we hear you loud and clear. Yes.
Okay, sorry. The little volume thing on the side which tells me whether I'm speaking just doesn't seem to be showing up, so I thought that I wasn't speaking, but all good. I must say that the conference organisers here do a phenomenal job in most organised conferences I've ever been involved in, including, pre-sessions to check all the equipment, and then someone like me turns up and changes everything about 15 minutes before I'm meant to go on, but that's entirely my fault if there's anything to do with it. My name is George Turner, and I lead an organisation called TaxWatch. TaxWatch is a UK-based, we call ourselves an investigative think tank. And what we're really about is looking at the tax system from a public interest point of view. A lot of what goes on in the world of tax necessarily goes on in confidential relationships between taxpayers and tax authorities, but at the same time there's a huge public interest in the way the tax system operates, which has been increasing over the years, as everyone will be familiar with the amount of news stories about tax. Over the last 10 years, I would hazard a guess, is vastly more in the front pages than it was in the previous 10 years, partly driven by kind of big stories and leaks and that sort of thing. We try and kind of shed some light on the tax system, do investigations into wrongdoing, but also publish information and data on how the tax system works, hold tax authorities to account where they feel they should be doing better, and encourage them when they're doing the right thing. We're primarily UK focused, but obviously the tax system is international, and therefore we have an interest in international taxation as well.
Excellent. Thank you very much, George. I see we don't have Will with us yet. I'm sure he will join when he can. Sorry, my apologies. Will is here with us. Jim isn't with us yet. Like Will, Jim is J5 lead for the United States, but I'll allow him to introduce himself when he joins us. And, picking up on this theme about, moving from a tax technician to a tax spiritualist, I mean, tax morality is a very difficult, topic to deal with. And, we're now entering the world of philosophical discussions about morality and ethics. And given that the moral imperative to tax, or pay tax, should I say, is very much at the forefront of the agenda, whether it's at an individual level or at a corporate level, I would probably like to start the discussion with you, George, and then give opportunity for the others to respond.
Yeah, so I mean, I was thinking about this, does morality matter? And, in first instance, it's an incredibly easy question to answer. Of course, morality matters, because morality is the law when it comes to taxation. You know, the key component of the crime of tax fraud is dishonesty, and dishonesty can be seen as both a moral and a legal issue. Everybody has views on what constitutes honest or dishonest behavior. And in a criminal context, in a criminal trial, if people ever end up in those circumstances, people are not judged by a committee of experts, but they're judged by a committee of fellow citizens, non-experts. And they're judged on the standards of ordinary, decent people, and that is the test for dishonesty in British law, at least. So should we care about morality? Of course, because immoral tax behavior is illegal tax behavior often. Now, I would say that the conversation about tax and tax morality often means something very different. It's focused on the issue of personal morality or personal responsibility. The idea that we should do things or not do things, not because of an external constraint of having to comply with a legal system which we have no control over, common rules, societal rules, but because of a personal sense of what is right and wrong. Now, I want to tell you my view on why I think the world of these conversations have developed in that way, and why we've come to place an emphasis on personal responsibility. But I think first I should say that I think that personal responsibility is fundamentally a bad way to run a tax system, and is fundamentally a bad way to run any system where the actions of an individual has wider social consequences. I mean, if you want to see what personal responsibility gets you, it's 50,000 COVID cases in the UK a day in a largely vaccinated population. There are plenty of people who do not want to pay their, have no personal right to doing so. And so we can't rely on ideas of personal responsibility to stop those people. Now, in a world where tax is an issue of personal responsibility, taxation becomes voluntary. We end up kind of punishing those, or not punishing, but economically making people worse off who do want to do the right thing, whilst economically rewarding people who don't care. Now, I don't think we're in that world yet, but essentially if we base our ideas of taxation on issues of personal responsibilities, that is the logical conclusion of where we end up. Now, why do we end up in a place where this issue is even talked about? And I think fundamentally, in the Western world, we have, as a matter of fact, defunded the tax police over many years. If we look at HMRC, the headcount of the organization is down 40% since its creation in 2006. In the US, tax audits have fallen 40% since 2010. And I think there's another issue where tax authorities have complete discretion over whether or not to pursue tax losses via criminal investigation or civil claims. In a world of decreasing budgets, there will be a natural tendency to resolve issues or tax issues via private settlements or contract settlements between taxpayers and the tax authority, or adjustments of tax returns leading to possible tax tribunal cases. In the UK, we've seen the number of prosecutions for cheating the revenue fall dramatically. In 2016, 2017, there were 144 prosecutions and 79 in 1920. There were 19 last year, but the entire court system was on the verge of collapse during the COVID system, so I don't think last year is a particularly good benchmark to judge people by. But we can see there has been a secular decline in criminal prosecutions over a long period. There are good reasons for pursuing tax losses through the civil process. It's more efficient, you get the money back in the end anyway. But there are also serious consequences to that. The civil process focuses on answering the question, what is the correct liability of the taxpayer? The primary focus is not the moral question of whether the behavior was honest or dishonest in the first place. most importantly, the question of whether the tax advisor behaved dishonestly or honestly is pretty much not dealt with at all. So tax advisors who encourage or knowingly encourage their clients into dishonest tax schemes, in the end up not facing any penalty for that, because the penalty falls on the taxpayer, who just has to settle their tax liability. That develops a culture where tax avoidance is seen as legal or normal, or in some cases it is marketed as being encouraged by the state. I think that's often a bit of dishonest marketing on the behalf of some tax advisors who say that. But it becomes very confused to the taxpayer, who may have been told by someone with letters after their name, with a title QC, that everything that they are doing is legal. They then might be hit with a very serious tax bill down the line when it turns out that the scheme that they're involved in fails. They then end up in this confusing situation where they feel a kind of justifiable anger of resistance by being told by professionals that what they were doing was legal, and then ending up being heavily penalised for it. We have recently had a case in the UK where General Electric was accused of tax fraud in relation to a $1 billion potential liability. That case was recently settled with the pleadings of fraud being dropped. So both sides agreed that there was no wrongdoing on either side. But the case never went to court, was never tested, was never put before a jury. I would say that is always an inappropriate measure, in the sense. At the end of the day, if there is a tax liability of close to $1 billion, and the tax authority is confident enough in an open court to accuse somebody of fraud, that should always be put before a jury and never be settled as a private matter in the end. Now, in the absence of criminal action, we end up with a system where people have to kind of make judgments for themselves over whether the advice they're receiving is honest or not, whether what they're doing is right or wrong, and so on. You've now got an increasing tendency where people are advisors to court through the civil process for tax fraud. So, in fact, this week there is a High Court hearing starting in the UK of a very famous tax QC, where people are alleging, 300 claimants are alleging negligence in relation to a tax scheme that he advised clients on. Now, whatever the merits or not merits of that case, and we don't know the outcome, and we won't know the outcome for some time of what that case is, the scheme that he recommended his clients be involved in or advised his clients on was active in around the early 2000s, in 2002, 2003. If it takes the best part of 20 years for his clients to bring a negligence claim, I think we can safely say that that is the system not working very well. Now, I think people like Will and Jim and Florence in working in government can and do a fantastic job. So I don't want to see my comments to be seen as any criticism of what people are doing. But I think out there, the public want politicians to fund them better to do the job that they need to do, and then enforce that external tax morality so that people don't need to themselves navigate these complex personal issues in a vacuum of being told from the outside what is right and wrong through these more societal standards.
Thank you, George. And I'm pleased that you excused yourself as not attacking Will, Jim, or Florence. Obviously, the tax advisor worryingly did get it in the neck. So on that note, look, I mean,
some tax advisors,
the naughty ones, yes. I think that the challenge is a difficult one. There's no doubt. This topic is because groups like what George runs will challenge taxpayers who are not doing the right thing, even if they've got tax advisors. The difficulty is, they can't hold up the shield of legalism, because then they'll be saying, okay, but the problem really arises because tax law does not equal tax morality of the majority. So there is that discrepancy, and that makes it really difficult, because where do you start? Will was talking about the scaffolding being up there, and yes, that scaffolding is there, but you're saying is you can't rely on that legalism, so you almost have to go beyond that. So firms and individual taxpayers have somehow to say, sort of like say, I can't rely on pure legalism, now I must aspire to a higher standard of tax morality. And there is a healthy business that I enjoy, which is around areas of tax integrity, and firms are reaching out and they're trying to find out where does their own level of tax morality or tax integrity reside. And with that, perhaps, Florence, you may wish to comment on, how do you operate when you can't just sort of like, hide behind the shield of tax legalism?
Well, I think this issue will be treated in my presentation later. So if you allow me just to say a quick word on this issue of the moral imperative, I would like maybe to move from tax advisors to jurisdictions and countries and the decisions of governments. And I think I totally agree with George. Of course, there should be tax morality for taxation to be accepted, to be understood, etc. Now, to me, the question that we have to ask ourselves is, what does it really mean, and how could this tax morality materialize actually? And I think to that end, we could have a look at the game theory. This is very theoretical, I know, but I think the prisoner dilemma that you may know could be very interesting, because I think what is striking in the international tax game is that this is not the primary interest of every country to apply the international tax standards in a fair manner, for instance, to make the OECD transfer pricing guidelines applicable perfectly to intragroup transaction of the group on your territory. Some countries, and maybe we know them, can well prioritize the attraction of foreign direct investments over the revenue collection, and this can be understandable. But in this perspective, the problem is that if you do not respect the global tax agreement, then you can have a specific tax advantage. If you propose preferential tax regimes, if you propose zero taxation or abusive tax rulings, you have a competitive advantage. You attract business operations, and in particular, the booking of profits. And I think this is really interesting to see that in the context of the recent OECD G20 agreement on Pillar 2. Because what will happen is that not every country will have to implement this 15% corporate tax rate, but countries will have the possibility to recover the tax differential if they consider that other countries have not recovered it before. And what I fear now is that tax competition will move from a tax competition to tax rates, from a tax competition through not implementing correctly the other OECD standards. And in particular, if you choose not to recover the tax differential, you develop a comparative advantage, and maybe companies will be more likely to locate their headquarters in your country. So I think that that's a big issue, and that's an issue that the OECD must keep in mind, and the EU too, when transposing this Pillar 1 and Pillar 2 convention. If we take a step back and look at briefly what game theory says, because I think that's really interesting and amusing too. Game theory says that in the case where all countries cooperate, the welfare gains are maximized. Of course, if all countries apply tax rules fairly, they maximize their revenue collection. They can fund public services, infrastructures, etc. But if what we call non-repeated games, that is games where you have only one occasion in your entire life to make a decision to cooperate or not to, the temptation not to cooperate is too big. The best option is to defect, because it's so much easier and it will bring you a short gains. However, unfortunately, the international tax system is better pictured as what we call the repeated game, meaning that individuals, and in particular countries, have many different occasions to choose to cooperate or not to. They have multiple occasions, almost infinite occasions, to sign and ratify conventions, to implement, transpose the text, etc., etc. And in this context, what game theory says is that if one country stops cooperating, they all stop cooperating. End of the game. And maybe that's kind of the situation where we are now, to me. But if one country, and of course this is theoretical again, decide to return to cooperation, this can trigger again full cooperation, even if countries have defected in the past. And I think this is very enlightening for us, because for me, using this game theory means that tax morality means that countries cooperate in the tax field, even if they have no commercial or financial interest to do so. And even if some countries in the past have stopped cooperating, they do not have to follow the bad example, etc. So, of course, this would trigger a return to full and effective cooperation, which I think is the only cooperation that is effective. And again, every country would be able to collect its fair share of tax without losing a competitive disadvantage by applying the international tax rules. So for me, this is the big issue and the big point that game theory makes, considering what could be and how could tax morality materialize.
Fantastic, Florence. That's a formidable answer from an economist and a former student of London School of Economics. I do enjoy the game theory discussion. And in fact, later on in the conference today, there is another speaker who's talking about the removal or doing away with offshore centers. So I'm sure you will find that very interesting. But you will have noted that Jim has now joined us. Jim is joining us from the United States. I will allow him to introduce himself. Unfortunately, because of the technology challenges, you won't be able to see his picture. It's darkened, not because it's middle of the night in the well, it is middle of the night in the United States. It's because of the technological factors. So, Jim, welcome to the conference. If I may, first of all, invite you to just give a brief description introduction to yourself and description of what you do. And after that, I'm sure you've heard some of the discussion, the discourse that's taken place, and shifting gears from tax morality to the role, the enablers, as Florence was talking about. I would like to ask you as to what experiences you have had in the United States in leveraging the private sector, including financial institutions, professional bodies, whistleblowers, etc., to help tackle, the facilitation by professionals. You might have heard George's views on professional enablers earlier on.
Yeah, sure, Ali. Can you hear me okay?
We hear you loud and clear.
All right. I really appreciate everybody's patience with me. It is the middle of the night. It's actually, it's 3 a.m. here in the U.S. I'm on the West Coast. Appreciate your patience.
No, thank you for joining us.
Yeah,
the sun goes
thanks. Yeah, thanks for the opportunity. I have a suit on and everything. You're going to have to take my word for it. But it is dark here. So look, I appreciate the opportunity, everybody. I hope everybody's staying safe in these incredibly challenging times, friends, colleagues, everything. Yeah, I appreciate the introduction. I'll give you just a quick background and where I come from and how my division, criminal division, is relevant within the enterprise, within the IRS. So I'm the chief of IRS criminal investigation. Our mission is really to serve the American public by investigating criminal tax violations. That's my primary mission. But we also work a whole host of other related financial crimes, namely money laundering, bank secrecy, terrorist financing. I mean, the list goes on. From a relevance perspective, we're a criminal division in a civil agency. So from a relevance perspective, we play a significant deterrent role, and I underline and highlight deterrent. And the reason for that, and the reason I say that, is people have to know that there's a consequence for being willfully non-compliant. And the consequence is actually jail time, which is far different than paying a fine to resolve a matter. We're the only law enforcement agency authorized to investigate tax violations, and we're the only federal law enforcement agency in the U.S. that dedicates 100% of our time to financial investigations. So really, from my perspective, we protect the integrity of the entire financial system, which makes us unique. A couple other just quick things about the agency to give everybody some context. I have a division of about 3,000 individuals. About 2,100 of them are sworn law enforcement officers. We're in 11 international posts, around the globe. And that equates to about 22 personnel, agents overseas to help with our international effort. So, my number one priority, like I said, is pursuing tax, and not just any tax case. It's tax cases that are significant. And I have to do that based on the limited resources that I have. And I've got to cover a broad range of program areas that really touches every social status, not just the rich. If figuratively speaking, I really need to make it appear that I've got a police unit like in every neighborhood on every corner. And so tax cases in a broad range of programs with significant communications, how we do this. And some of those programs, it's very similar to a lot of criminal tax authorities, but we have, my primary, employment tax, international tax fraud, refund fraud, identity theft. We work a lot of crypto, money laundering, narcotics, the list goes on. So I think the last comment I'll say about IRS criminal investigation is really my perspective. And I feel everybody would agree that most crimes, other than random acts of violence, occur in an effort to make money. And so as a result, my division can really get involved in any case from a financial aspect. I've got to just be selective due to the limited resources. And so Ali, if you want me to just roll right into, the professional enablers, I picked up some of it. I was really fortunate in the recent past, have the opportunity to speak on an OECD panel revolving around the professional enablers report that was released. That was really 2 to 3 years in the making. Very inspiring to see the results and collaborative work by so many come together in one report. It's a great resource if you haven't had a chance to look at it, anybody listening. From a U.S. perspective and really an IRS criminal investigation perspective, the timing of that report was incredibly relevant to my division. As we continue to identify, target, and recommend criminal prosecution for professional enablers, who possess this industry knowledge and are often key in facilitating, the ability to evade tax and launder illicit funds. But I know there's a ton of work that I still have to do here in my division domestically. So I can give you a little bit of an evolving story, here in the U.S. Around professional enablers. We've really continued to focus on professional enablers such as, corrupt tax preparers, attorneys, accountants, business owners, the list goes on, independently, as well as focusing on, promoters and various facilitators of abusive tax shelters, like micro-captive insurance and conservation easement schemes, just to name a few. And we've seen success and prosecution in that space. Internationally, in the recent past, we focused on Swiss banks, specifically, various financial institutions and asset managers who assisted U.S. taxpayers in evading income tax. Throughout the division, I simply continue to stress the importance to not only target the person benefiting from the scheme, but also to target the promoters and facilitators that are necessary to, to make the crimes happen. Bring criminal charges, and that's how we have the greatest deterrent impact. And I feel that everybody on here can agree that when attorneys and accountants and bank employees, anybody that falls into that professional enabler category in general, they see their colleagues being criminally targeted and criminally charged, not to pay a fine, but potentially face jail time. That creates deterrence, because then they can see themselves being charged if they get involved and facilitate, those similar crimes. So, I think maybe if you humor me just for a couple more minutes here, there's a couple of programs that I've been, or initiatives that I've seen here domestically some success with, to tackle professional enablers and leverage private partners. 3 real quick programs. We have a voluntary disclosure practice. I really view it as a program offering, an opportunity for the taxpayers to become compliant with their tax obligations and potentially avoid criminal prosecution. And in general, how it works, it's an IRS enterprise program. If you apply to the program and you're already under criminal investigation or you're already under a civil examination, you're not eligible. Taxpayers can be removed from the program if they're not accurate, are providing completely truthful information. To participate, they've got to disclose all their financial records, financial institutions, and those professional enablers associated with their tax non-compliance with the IRS. That gives us then the opportunity to look at all this information and connect dots. We've had numerous areas of success there. We've identified numerous financial institutions and professional enablers that assisted U.S. taxpayers through this program. Another program we have, within the service is we call it it's a whistleblower program. Generally speaking, whistleblower, from my perspective, is an informant, who essentially provides information in hopes for an award. And here, the way it's structured with the enterprise, that award, they're essentially attempting to get an award equal to 15 to 30% of the amount of tax collected. And that's really when they get paid. Several of our most significant investigations involving financial institutions, bankers, asset managers, offshore service providers, they were initiated through the whistleblower program. And the last one I'll just quickly mention, again, I really appreciate the time, everybody, is our Office of Professional Responsibility. Again, this is another enterprise office. And this particular office essentially establishes and enforces, standards, consistent standards and conduct for tax professionals, enrolled agents, attorneys, CPAs, other people who practice in front of the Internal Revenue Service. And my division regularly obtains listings of individuals for lead development opportunities whom the service believe may have engaged in misconduct, representing clients in front of the service. So these are just simply some examples of how we're attempting to ensure that we're sending a message that we do hold professional enablers accountable across the board.
Fantastic, Jim. That's really helpful. The role of enablers or facilitators is a very important one. And but so interesting to hear about the whistleblower program, that you can pick up a portion of the proceeds, which I think I know we've got some listeners from HMRC, and maybe something for them to think about, that it's not all about the stick. The carrot sometimes helps as well to incentivize. So interesting development on that side of the pond. I'm just going to actually, before I go to Florence, I'm going to actually invite Will to just if you would like to comment on anything that Jim has said, and particularly with regards to the UK's legislation, which I'm sure you've heard through Simon York and so on, that they've been brought in 2017, the failure to prevent the facilitation of tax evasion. So that's again a criminal liability that's been brought into UK law. We have yet to see a high-profile case under it. Obviously, there's a number of cases that the HMRC is pursuing. But is that something that, particularly because the UK legislature has not just confined it to UK domestic taxes, it actually has a overseas taxes element as well, the Section 46 offence, as it's known as. Is that something, Will, that people around the world will be looking at?
Sally, and really difficult to close out 3 very formidable discussions there. And just as an aside, obviously more in common with George in terms of his views than you might immediately think. And I think you're right, George, to emphasise the importance morally as well as legally of payment tax. And I think the importance that professionals of all sorts do play, not only in refusing to get involved in facilitating those sorts of tax crimes, but also in a positive way. And I think the way Jim's highlighted some of those is really important, certainly within an Australian context. Through AUSTRAC, who is our FIU, we very closely with the major financial institutions really around money negotiations, but we work and I'm working to try to help the banks to better identify potential suspicious matters for us to act upon. So there is definitely a positive kind of role for professionals as well. Picking up on your point, Ali, around I guess the UK legislative reform, certainly we've watched them with interest over the last few years, and certainly have had conversations, are very interested from perspective around the model, but also J5 on a scale that UK division. So you're right to say that's certainly a very interesting legislative reform, and we're certainly very interested in working with HMRC potentially around matters as well.
Excellent. Thank you very much, Will. And with that, Florence, I mean, we've had discussion. Obviously, the tax enforcers are clearly interested in going after the facilitators, the enablers, and that obviously then brings the attention to banks and other private sector and also publicly owned financial institutions in not playing a role or becoming part of that ecosystem.
Yeah, actually, we have a very interesting and recent experience at the EU level, because a specific directive, which is called Taxation and Administrative Cooperation in the field of taxation, has been published a few years ago, now in 2016, and now it has been transposed and in almost all of the member state legislation. And this directive really targets the responsibility of enablers, since it creates a new obligation for what they call intermediaries to report to their national tax administration any cross-border arrangement that is potentially aggressive from a tax perspective. It means that any intermediary, and we will see what it does mean quickly, has to report to its national tax administration all the operations that it suspects it could contribute to tax fraud, evasion, or avoidance. So this is very, very new. And in this context, there are two different categories of intermediaries that have to report under DAC6, and the AFD is concerned by this. So we worked a lot on this new text. So the first kind of intermediaries that should report to their national tax administrations are the promoters, that are the people who design, market, and or organize these kind of disposals. And it can be, of course, lawyers or consulting firms. But the second category of intermediary, which is much more difficult to grasp and understand, it's what we call the service providers, which refer to people that aid or provide assistance or advice to the clients on designing these so-called cross-border arrangements that could be aggressive from a tax perspective. And this could actually include banks, because by the mere fact of funding a project, you're considered to be a service provider. You aid the project and the legal structure, if complex, to be financed. And what happens next? Well, the primary responsibility to report this disposal relies on the intermediary. So these are the tax lawyers, consulting firms, banks that have to report, not the taxpayer in first instance. The taxpayer has to report only in the case where the operation is under financial secrecy, professional secrecy, sorry. So for lawyers and bankers, that's often the case. But in that situation, the responsibility of the intermediary is still very vivid, because the intermediary has to notify formally the taxpayer of its obligation to report. So the intermediary has the big responsibility any case. Taxpayer is only on the second instance. And this is very, very interesting from a responsibility perspective. And in the case, if there is more than one intermediary, one EU intermediary, of course, because that's only an EU directive, all the intermediaries will have to report the disposals. That's very, very lots of work actually, except if they can prove that the disposal has been reported previously by another intermediary. That is a very complex system. What happens if you do not report? Only a fine of 10,000 euros maximum per disposal. So, I mean, that's okay. But of course, in the case of the opening of an administrative inquiry that revealed the intention to fraud, criminal responsibility of the taxpayer, of the intermediary could be involved. So there are three big innovations in this DAC6 directive. First, it creates a responsibility for the enablers that advise or provide aid to the clients. This is absolutely new in the EU. It also creates a sort of new step just before the suspicious transaction report. I mean, intermediaries have the obligation to report, to declare the mere presence of criterion that could potentially indicate a risk of tax fraud, evasion, avoidance. This is not the suspicion of a clear criminal offense. This is very different too. And finally, this creates a new content for the automatic exchange of information between member states. So to me, this is very clear. The answer of the European Union to the question of what should be the responsibility of enablers, this new directives requires them to report all the potentially aggressive operations. And this is a big deal for us and also for development banks, because this is very new. And this sometimes requires us to implement new procedures.
Yeah, I mean, it's an interesting one. I mean, I think in having an early warning system sounds like a good idea, but it can be quite onerous for financial institutions. And obviously, based in the UK, which basically passed the DAC6 legislation at the start of the year. And then by the end of the year, it had basically withdrawn because we have decided to leave Brexit. So it was quite a bit of a costly exercise for British financial organizations. But anyway, before I move on, and I do want to come back to a bigger discussion, George, you've been silent for a while, and I'm sure you're not lost for views. I thought maybe I'll just give you an opportunity in case you have anything to comment before we move on to our next topic.
Anything? Well, I mean, there's so many things covered. But I think I'm fine. I mean, I think one of the things I did reflect is that, you know, I think what I tried to set out is kind of a somewhat theoretical picture of how personal responsibility might fit into these conversations of moral behavior. And I think, you know, it's important not to kind of say that anyone is, you know, there are different jurisdictions that will be on different ends of that spectrum, where, you know, morality is seen as a kind of public issue with public rules and public laws that are enforced by very effective enforcement agencies, and jurisdictions where there is not a lot of enforcement going on. I'm not talking people on this call or people who represent jurisdictions on this call, but, you know, globally in general, where it will be much more about personal responsibility. So I think, you know, that is something to keep in mind as well. And one of the things that, you know, the OECD and other organizations are trying to do is to kind of come towards some common standards on that question. But it's always going to be a very difficult one where the governments take different attitudes towards what is acceptable constraint or what is not acceptable, how much they're willing to fund enforcement, how much they're not willing to fund enforcement. And, you know, you will have, you know, this has been the problem with the race to the bottom to some extent. Some people think the race to the bottom is about cutting rates and cutting, you know, giving people tax incentives. It's also about creating environments which are enforcement light.
Yeah, I mean, it was interesting, the comments that you made about resources, and just then Jim proceeded to tell us that he's got 3,000 agents, and I'm sure Simon York in London is thinking, I wish I had those kind of resources. So
yeah, and there's very different tax systems. You know, the IRS doesn't deal with sales taxes, whereas HMRC has to administer VAT. I think probably the ATO administers general sales tax in Australia. I don't know, but and that is a huge part of tax enforcement is sales taxes. So it varies wildly. One thing I did want to actually you mentioned about HMRC would probably want to introduce a reward program. I know in the UK we do have a reward program for tax whistleblowers, but last year in the latest annual report, I think it paid out around £300,000 in total. It would be interesting to know what the comparison was with the US and how much the IRS paid to whistleblowers over the same period.
Yeah, I think 300,000 is small change compared to what I'm sure Jim is handing out little bonuses for right behavior. On that note, I mean, one of the challenges, it's not lost on us. We are coming towards the end of COP26 that's taking place slightly north of where I live. Sustainability is a big agenda item, and sustainability is linked, closely with how, we operate across the globe. And we've talked a little bit about offshore centers, but I think sort of like developing countries are important facet of our, universe that we must think about and linked very much to sustainability. So I'm going to ask Florence, what do you think that development financial institution such as the French Agency for Development, what specific role do they have to play in tax morality arena?
Well, thank you, Ali. I think that's a very interesting question. Actually, what you should know is that what we call the development finance institutions, DFIs, and the multilateral development banks that we call MDBs. I will call them development banks for the rest of the conversation for an easiness to understand. So these institutions, development banks, actually, we took a very strong interest in the tax morality issues more than 10 years ago. And these include, of course, the IFD, but also the European Investment Bank, the World Bank, or I think about the DEG for the Germans. And firstly, I think this is because of the AML requirements that we have to respect. Development banks do not always have to follow banking legislation, but they always are subject to AML CFC legislation. It can be from the national government, of course, from international standard setters, bodies such as the FATF, and from the EU too. And in particular, what the AML legislation requires is that every complex structure or every interposed entity that we detect in the legal structuring of the project we are supposed to finance should be thoroughly motivated. We should have a clear understanding of the economic business reasons why these projects are particularly complex or with the interposed entities. And second, very important issue, of course, this is very actual, we have to be 100% sure of the identity of the UBOs. We have to be sure that these are not nominees. And without those two checks, motivation of complex structures, motivation of the presence of interposed entities, and very strict verification of the identity of UBOs, there is no operation funded, either for AFD, either for any development bank, either for any bank normally. And of course, the importance of the identification of the UBOs has been illustrated very recently with the Pandora Papers. And maybe you know that the FATF is now considering amending its recommendation number 24 and the transparency of UBOs of legal person. So going back to the tax perspective, what must development banks do? We should ensure that the operation that we fund do not contribute to tax fraud, tax evasion, or tax avoidance because of two main reasons. First is we always have to be able to detect the risk of laundering the proceeds of tax fraud and the risk of tax abuse. This is absolutely crucial for us. And second, we should also be able to make suspicious transaction reports to our financial intelligence unit, which is TRACFIN in France. And despite this very strict legal framework that emanates in particular from the anti-AML EU directives, we are not protected per se from the capture by elites. There is no absence of risk due to our special statute as public agencies, etc. And this is really interesting because this has been illustrated quite recently last year by the publication by the World Bank of a largely mediatized paper on the leakage of aid. And this paper suggests that 77.5% of the public aid granted by the World Bank Group was captured or diverted to offshore bank accounts in countries that are known for bank secrecy or wealth management. This is huge. This is public aid. This is public money again. And of course, if tax fraud does not fit for morality per se, what about the leakage of public aid to the benefit of the elites? That's when you think about this, it's crazy. And of course, sometimes we detect such attempts to preempt the aid. And for that, we have specific tools. These tools, in particular, rely on the blacklists that are issued by different institutions, the blacklist or the grey list. Actually, the majority of development banks have specific policies for all the operations that involve one or more non-cooperative jurisdiction. This NCG, it can refer to either countries listed for AML reasons and tax-listed jurisdictions. That's the blacklist, we call them. And the most used list are the national list for each of the development banks when they are national banks. The list of the FATF, of course, which is the most known in the field of AML CFT. We have also the IMF list, which is not really updated, but still many DFIs use it. The OECD, and in particular, the work of the OECD and the exchange of information for tax purposes, and the EU list. And we will go back to this EU list a bit later. So any case when in an operation, you have the presence of this kind of country, a blacklisted country, either for AML or tax reason, it triggers two kind of measures. The first is the strict prohibition or conditional prohibition to fund the project. Again, end of the game. Second measure that we have to apply is enhanced KYC and tax due diligences for every entity that own a certain percentage of the counterpart. So strict or conditional prohibitions and enhanced KYC and tax due diligences. And if we look at an example, the example of the use of the EU funds, we see that it is prohibited to finance a project if the counterpart is located in a blacklisted jurisdiction, unless two conditions. The project must be implemented onshore in those specific jurisdiction, and it does not contribute to money laundering, financing of terrorism, corruption, tax fraud, etc. So of course, onshore operations are often allowed because they are part of our mandate as development agencies. But however, the presence of counterparts or the presence of shareholders in blacklisted countries is not neutral at all for all development banks, but for all banks in general, because that triggers specific prohibitions, that trigger a lot of requests of information, lots of questions on the identity of UBOs, but also these economic motivation, commercial motivation. And these lists have a huge impact then on the length and on the complexity of the financing process, and it slows down the disbursement of funds considerably.
And I get that, the activities can be inhibited. And the difficulty, as you say, is on the other side, you've got, sort of like something like tuna bonds happening. And, what can you do? You have to treat those jurisdictions with a certain degree of suspicion and hence the higher threshold requirement.
Yeah, exactly.
And the EU is an interesting one. We've got Paul Tang in the conference, because I know, you mentioned the EU list, and, it's critiqued and it's seen by most practitioners as open to political and monetary manipulation. I mean, you need to send someone to Brussels with a suitcase of money and you'll get off the list.
Yeah, sure. Maybe to understand to answer quickly to your first remark on what we do when we face the specific jurisdiction. Actually, we do this KYC checks, etc. But we have a specific matrix internally that describe for each kind of list, either blacklist, grey list, tax list, etc. To what level of percentage of the shareholding we should implement the tax due diligences. So for each different list, we have different degree and different degree of detail when we apply these due diligences. And on your second remark on the EU list and the content of the EU list, this is very interesting. Because actually this so-called EU list does not only applies to EU development banks and for EU funded projects, because in EU member states, these lists are often transposed in national law, so they apply to, for instance, DEG, FMO, etc. And for non-EU institutions, they apply too when they use EU funds. And for instance, the World Bank uses EU funds. So this EU list has a very huge impact internationally. And of course, what is striking, and I think Paul Tong totally agree with that, because this is part of the comments made by the tax subcommittee, is that in this list, there is no or very few Western countries, and of course, no member state. That's a list of third countries. To give you a bit of context on those lists, in a very simple manner, the Commission, the European Commission, issues two different lists. The first is the blacklist, which refers to the non-cooperative jurisdiction for tax purposes. That's the worst list, I would say. And the second list is the grey list, which is a list of countries that have taken commitments to implement good governance tax principles. That's kind of political, but still.
Of course.
And actually, as you were mentioning, this EU list and its content is the subject of many concerns expressed by many NGOs and also the European Parliament,
Exactly.
as you was explaining. Because of course we know that EU member states, they have regulation for transparency. They have DAC, for instance, and DAC 6 now. They have specific regulation to fight against harmful tax practices with ATAD. But some countries are known to be offshore financial centers. We know
Absolutely.
them. We won't name them, of course. But this is shown by the number of infringement procedures, for instance,
Absolutely.
issued by the Commission for the non-total implementation by EU member states of these directives, ATAD, DEC. This is also shown by the multiple state aid cases issued by the Commission when you consider the abusive tax ruling issued by member states to
Florence,
Apple,
sorry
Starbucks, Fiat.
sorry to interrupt. I'm just conscious of time. We've just got last few minutes. So thank you very much for that. I'm going to just go across, continuing with the discussions about the jurisdictions, to Will, and I'm going to ask you to keep it very brief, but we have had a question and it's linked to this, is the J5 is made up of countries that are the biggest tax facilitators or houses, the biggest tax facilitators. Do you think this impedes the work of the J5? I think Will is frozen. Oh, there he is.
I'm sorry, Ali. Was that a referral to me? You were breaking up a little bit.
Yes, I was just saying that there was a question from the audience and I just wanted to finish off on that.
Would you mind repeating the question, Ali? I'm sorry to do that to you. You broke up a little bit.
No problem. Basically, they said the J5 is made up of countries that houses some of the biggest tax facilitators. Do you think that impedes the work of the J5?
So I think, the J5 certainly comes together as organisations with a shared history and a shared focus. It's certainly our desire to take action against the facilitators of tax crime. I think I'm well placed to do that, but we certainly are making significant operational steps forward. I don't know that a jurisdiction kind of focus is particularly important to us. We're looking at the enablers of tax crime wherever they might be.
So will the J5 become J10 and J20 and J30 at some point?
Look, I think if something, our focus is operational, and I think that if you end up becoming too big, you can be effective at sharing intelligence and training and approaches. It's harder to maintain that strong operational focus. So we are very interested in the issue of sustainability, certainly from an Australian perspective, interested in how we can contribute to the development of tax crime capability, in particularly across the Indo-Pacific kind of region, and we do make contributions to the tax academies around the world, for example. So
Great, thank you very much, Will. I'm just going to sort of just conscious of time, I'm going to give the other speakers a minute each with their final thoughts or real takeaway points that they have for us. Starting with you, George, 1 minute.
Well, I thought I would just add my piece to that final question, really, which maybe helps some things up, which I don't think that the J5 countries being the location of some of the biggest enablers should be a problem. I think it should be an advantage. These are countries which are generally seen as having strong rule of law frameworks, which confer legitimacy on these organizations that promote and enable tax bad behavior. I think if you had an advisory practice, no disrespect to Belarus, but if it was headquartered in Belarus, I think it would have struggled to attract multinational clients in other business areas. So, if we can have a system where these jurisdictions enforce tax bad or immoral behavior with some of these large advisory practices, which may be advising their clients to do things which are immoral, then that is a good thing. And having those organizations in jurisdictions with strong institutions, it should be a good thing. I think if we have more enforcement, that will be a good thing. And it has happened in the past. The IRS some time ago took criminal investigation and criminal charges to KPMG. And I'm sure the settlement that they reached with KPMG encouraged some reflection at that institution about their practices. So I think, at the end of the day, what my call would be to politicians to better fund these agencies, to give them the tools to do the job, and to enforce the morality that the public feel very keenly and understand, I think, better than a lot in the tax profession think that they understand.
Excellent, George. Thank you very much. I'm sure the HMRC feels the love you're sending their way. With that, Jim, do you have any final thoughts?
Yeah, thanks, Ali. George, I completely agree with funding agencies. I hope everybody over here hears that. I think a couple just ending thoughts. Look, my division really values public-private partnerships. I know we didn't have a chance to get to that. I'm going to continue to put significant emphasis on that here, and it's a proven these critical relationships is the pathway to success. Jumping on Will's comments about the J5 there, I would suggest that everybody should be on the lookout for a number of operational announcements from our J5 partnership. I'm briefed regularly, on these operations, and really expect of more and a number of outward-facing announcements, in the very near future. And just remember, that our J5 partnership doesn't function in a vacuum. In addition to sharing information relating to professional enablers between the J5 countries, to the extent possible, J5 has also shared data and findings with other non-J5 countries that professional enablers have impacted. So I think my final comment for time purposes, here I told you deterrence is key. Communication is a big piece of that deterrence, and so we're going to continue to grow our use of social media. That's the name of the game these days, right? And with public outreach, and we've taken a number of steps here with IRS criminal investigation to use social media, and we recently launched a Twitter account. So just a real quick plug. I'd like to ask everybody to follow us on Twitter, at the @ IRS_CI. And look, anybody out there, that has a U.S. that's listening, that has a U.S. Tax filing requirement, I promise you're not any more likely to be audited if you simply just follow us on Twitter.
Thank you for that reassurance. Will?
Yeah.
It's very hard to follow that, isn't it? Look, I think my final comments would be, I think the morality of tax is important. I welcome the conversation around tax spiritualism. I think it is important, and I think professionals play a really important role, as I said earlier, not only in not resisting, but in working actively with tax regulators and really helping to enforce, I guess, the morals of society.
Thank you very much, Will. And finally, last but not least, Florence.
Thank you, Ali. Well, I think the biggest issue then for us development banks today is the content of this EU list, because this creates a discrepancy of treatment between developed and developing countries. It is now much more complicated to finance an offshore financial center in a developing country than an offshore financial center in a developed country. And this is really a fairness and equity issue. And I think that maybe instead of excluding developing countries considered as offshore financial centers from the public aid, our responsibility as development banks, development agencies, would be better to help those countries to develop new comparative advantages other than tax advantages. Thank you.
Fantastic. Thank you very much, Florence. And actually, I want to take one final minute to thank our panelists, because you have provided us with a fantastic insight into the work that you do. It has been an honor and a pleasure to be your moderator. And my sincerest apologies that there was other material that we wanted to cover, but we just ran out of time. So that is a failing on my part. We have had a fantastic discussion. I have learned a lot, from discussing scaffolding to responsibility, game theory, carrot and sticks, offshore centers being abolished, the EU list, tuna bonds, beneficial ownership, J5's international outreach. So I think we've covered a lot of ground in a very short space of time. And as I said, a real pleasure, and I look forward to working with you in the future. So thank you very much on behalf of all the audience. Much appreciated, and particularly those of you who are joining us at an ungodly hour. Thank you very much. Goodbye.